Hello to you. In this video I am going to talk a little bit about the Chinese EV market in general, the bond between the Chinese government and NIO. I will be also covering Xpeng updates. Chinese EV ends 2020 on record high deliveries and it is expecting 1.8 million units sales in 2021. China's electric vehicle market has experienced a boom in 2020 as one after another carmaker reported new highs in monthly deliveries despite subsidy cuts and a shakeout since the pandemic struck. Electric vehicle shares are sharply higher in the past 1 year, with most of them up more than 150% in the year. Li Auto deliveries grew 530% Y to 6,126 units in December. The company shares are up 150% since its initial public offering on Nasdaq in July 2020. NIO deliveries grew 121% Y to 7,007 units, plus 121% Y in December. Tesla, TSLA plus 1.6%, delivered 180,570 vehicles and produced 179,757 vehicles in Q4. Tesla's share price has risen more than 700% over the last year, reported 5 consecutive quarterly profits, and in December it was included in the S&P 500 index. Xpeng deliveries grew 326% Y to 5,700 smart EVs in December. The company's shares rose more than 185% since the initial public offering on NYSE in August. The Chinese EV sector enters 2021 on high hopes with extremely strong finish in 2020, reflecting the strength in demand reflects the overall recovery in China's economy and its auto market. China's EV sales expected to grow by 40% to 1.8 million units in 2021 and to reach 6 million units in 2025, driven by new energy vehicle industry development plan for 2021 to 35 that expects sales of new energy vehicles to comprise 20% of total new car sales by 2025, up from previous outlook of 5% S&P Global Platts calculation. Total China auto sales are expected to reach 27.227 million units in 2021. China will also cut subsidies on EVs by 20% in 2021. Now this is bad news for the Chinese EV market. Unless the demand for EV cars is so strong that we don't have to worry about that. Generally speaking, the Chinese government has been willing to pull several policy levers to support the EV industry. These include incentives such as purchase rebates and tax exemptions. For instance, the government had restrictions around securing a license plate to limit the number of new vehicles on the road to reduce pollution. However, several local governments have been lifting these restrictions on the purchase of new EVs. Despite these incentives, the pandemic brought about by COVID-19 had significantly impacted EV sales for several automakers in China. Sales had already started to sputter last year as the government gradually started cutting back its support with a view to phasing out subsidies by 2020. NIO saw its Q1 2019 and Q2 2019 EV sales drop by approximately 58% and 8% sequentially as a result of the subsidy cuts. China will also beef up regulations on new auto investment and manufacturing, the ministry said, in a move to prevent overcapacity in the auto sector. It will take steps to spur further consolidation in the auto industry and build a more comprehensive supply chain, the ministry added. China will extend subsidies and tax exemptions on NEV purchases to 2022. Global automakers such as Volkswagen Group, General Motors, Toyota Motor and Tesla are ramping up EV production in China, facing competition from domestic automakers NIO, Xpeng and Li Auto. Chinese government and NIO. NIO's success is anchored to support from the government to a great extent. While it did receive financial support in the form of a $1 billion bailout last year, it came at a cost. The $1 billion was provided by a consortium of state-owned organizations. In return, NIO needed to establish a separate company, NIO China, and transfer its core assets in China, valued at around RMB 18 billion to the new entity. Assets included R&D, supply chain and manufacturing, and NIO Power Network, battery charging and power swap facility network. The investor group would own around 24% of NIO China, along with voting rights, and the rest would belong to NIO Inc. Additionally, NIO has committed to building a new headquarters for NIO China in Hefei. By its own admission, NIO Motors acknowledged that granting voting rights to the investor group would limit its ability to make certain major corporate decisions with regard to the new subsidiary. Moreover, if NIO doesn't meet certain corporate agreements including failure to take NIO China's subsidiary public within 5 years, the Hefei investors can redeem their shares at an 8.5% premium. If that happens and NIO doesn't have adequate cash, the company may be forced to sell its own stake in NIO China, and consequently lose control of its operations in China. This implies that even with a minority stake in the new entity, by virtue of their equity injection, the Hefei investors have a senior claim to the company's capital structure. If for any other reason the business goes sideways, the investors would receive a hefty payout. On the flip side, if NIO manages to meet all the agreements, the group of investors stands to benefit from its 24% equity in the company. While it's true that state support is key to NIO's success, it has come at a huge cost to the company. NIO's risk of insolvency has been replaced by other operational and financial risks. Meanwhile, the government receives a guaranteed return on its investment. If you like this video so far, then give it a thumbs up. Subscribe to my channel for updates and insights in NIO. Xpeng key points. 1. Xpeng continues to show rapid growth in deliveries through Q4. 5,700 smart EVs were delivered in December, representing a 326% growth rate year-on-year. For 2021, strong revenue growth to a potential RMB 14.5 billion will be aided by the physical store footprint, margin expansion and domestic delivery growth. 2. Xpeng's future delivery growth, investments in R&D, autonomous tech and European expansion could charge up future growth prospects. Xpeng's wild quarter of trading following the tracks of close peers NIO and Li Auto has seen shares dip almost 50% from YTD highs in late November, even as the company continues to send delivery numbers and revenues higher. While EV growth and adoption in China is expected to continue at a rapid pace, Xpeng's future delivery growth is a result of that tailwind, as well as its investments in R&D, autonomous tech and European expansion could charge up future growth prospects. Chinese EV demand continues to rise, with a strong triple-digit gain in November pushing NEV sales to a YTD gain, while sales in traditional vehicles remain down. CAAM reported that total auto sales rose 12.6% YoY for November, although sales of new energy vehicles, the bulk of which are electric cars, more than doubled to 200,000 units. NEV sales now are showing 3.9% growth year-on-year to 1.1 million units from January to November, representing the demand resilience from the pandemic-related slump in sales in the beginning of the year, as well as an acceleration of EV adoption as manufacturers continue to ramp up production to meet demand. Xpeng continues to show rapid growth in deliveries through Q4, with November's 4,224 units delivered representing a 342% growth rate year-on-year, after the company successfully finished a rapid production of 10,000 units of the P7 in just 160 days by late October. With October's 3,040 units delivered, for year-on-year growth of 229%, deliveries for Q4 so far have hit 7,264, just 1,000 shy of Q3's total, as Xpeng heads for another very strong quarter of deliveries growth. Xpeng has delivered 21,341 units so far this year, 87% growth, with December possibly pushing that above 26,000 units. Q3's deliveries of 8,578 generated RMB 1.99 billion in revenues, 293 million United States dollars, due to the sharp rise in deliveries associated with Xpeng's successful rapid scalability of manufacturing. Aside from this heavy triple-digit revenue growth, Xpeng's growth in deliveries, and continual growth through Q4, has led to positive margins, even though net loss widened a bit to RMB 864.9 million. Gross margin rose 1470 BP YoY and 630 BP Q-on-Q to 4.6%, while vehicle margin rose 1400 BP year-on-year and 880 BP Q-on-Q to 3.2% during the quarter, as both metrics were boosted by delivery growth offsetting production overhead costs. For Q4, revenue should grow at a solid clip Q-on-Q, rising to RMB 2.67 billion to RMB 2.87 billion, 410 United States dollars minus 440 million, should December show near 5,000 deliveries. For quarterly deliveries above 12,000, this would exceed internal guidance of 10,000 units and RMB 2.2 billion in revenues. That would lead to a 12-month forward revenue estimate at above RMB 10.0 billion or 1.49 billion United States dollars by Q2 21. Revenues should continue to rise significantly as capacity extends to its full amount during 2022 and will be aided by new production in Guangzhou in 2023. Xpeng noted that, in addition to its wholly owned plant in Zhaoqing, Guangdong Province, which has an annual production capacity of 100,000 units, Xpeng's new smart EV manufacturing base in Guangzhou will significantly expand the company's production capacity and accelerate Xpeng's momentum to achieve its goals in innovation, technological advancement and growth. Zhaoqing's capacity of just over 8,000 units per month still hasn't been fully translated into deliveries, which sit at about half of that figure. However, there's much more room for growth in monthly deliveries and quarterly revenues as deliveries start to rise closer to that max capacity level. Future capacity expansion will only aid revenues as higher delivery potential will be unlocked. For 2021, strong revenue growth to a potential RMB 14.5 billion will be aided by the large, 100-plus physical store footprint and margin expansion, with vehicle margin possibly rising another 400 to 600 BP to just under 10%, with gross margin about the same. This would mean that Xpeng's margins could remain weaker than peers Li, 19.8% vehicle and gross margin for Q3, and NIO, 14.5% vehicle and 12.9% gross margin for Q3. Xpeng's cost of production could remain a very significant, 80+% of revenues moving forward through 2021 as the company is dedicated to heavy R&D investment. Xpeng is also taking tentative steps into European expansion, a market which provides a significant amount of room for growth. An initial 100 units of the G3 model had begun delivery to Norway just over a week ago, kicking off Xpeng's international expansion plans ahead of a slated P7 launch in Europe within the next 12 months. Yet the R&D investment picture already looks promising, and could potentially allow Xpeng to start grabbing more market share in the mid to high-end market, as its two models compete with other EVs for top-of-the-line specs and features while offering a longer range per change, beating out foreign imports based on price. Xpeng announced in November that it has significantly upgraded its autonomous driving software and hardware systems for the 2021 production models, introducing LiDAR systems to new vehicle production. Xpeng also received the Car of the Year 2021 by the Xuanyuan Awards, China's most prestigious badge of auto quality and innovation, for the P7, highlighting Xpeng's prestige status in creating and elevating a superior human car experience that breaks the stereotype of an electric sports car. This recognition of quality and status could lead to more sales through 2021, although it's no guarantee. Xpeng has the cash and desire to continually push R&D standards higher, so combining that with capacity expansion paints a positive outlook, even in a fragmented market. Xpeng had nearly RMB 20 billion in cash and equivalents at the end of Q3, and raised another RMB 16.3 billion, $2.5 billion United States dollars, from the recent share offering. However, Xpeng still could face stiff competition from makers like BYD, OTCPK, BYDDY, and Geely, OTCPK, GELYY, that have access to similar subsidies and manufacturing, labor costs, such as the BYD Han, which has a lower midpoint MSRP than the P7. Price competition might continue to gain traction as subsidy allotments change. The 2020 subsidy circular had in principle that the subsidies for NEV purchases from 2020 to 2022 will generally be lowered by 10%, 20% and 30%, respectively, based on the level of the previous year with limited exceptions in the area of public transport, and the total number of NEVs in China that will be entitled to such subsidies should be no more than 2 million each year. Plus, any reduction or elimination of government subsidies and economic incentives fiscal tightening, could alter the rate of EV adoption and/or the desirability for EV if not a necessity. Aside from that subsidy risk and price competition, there looks to be an upward trajectory for Xpeng's growth, while valuation remains just about on par with NIO. Xpeng trades at about 15 by 2021 sales of RMB 14.5 billion, while NIO trades at about 14.6x 2021 sales of RMB 31.3 billion. For comparison, Li trades at about 9.8x 2021 sales of RMB 17.9 billion. Xpeng still sits far from profitability, similarly to NIO, as high R&D and operating expenses will continue to cut into profitability even with a positive vehicle margin. EV names have dazzled the market recently, and while valuations might seem a bit stretched still, future growth potential is hard to discount. Xpeng has received recognition for its superior design and manufacturing while also enhancing new vehicle production with LiDAR. 2021 could shape up to be a strong year for Xpeng as deliveries continue to rise month over month, with revenues near RMB 14.5 billion possible. Further capacity expansion during 2023 should only aid future growth rates. Even though the EV market remains fragmented with heavy competition, Xpeng's dedication to innovation and R&D to create a new class of smart EV should allow it to grow market share over the course of the next couple of years in the mid to high-end market. Valuation at 15 by 2021 sales puts it at some of the higher multiples of its peer group, but rapid revenue growth on rapid production scalability leads to a justification of that multiple. As shares have pulled back significantly since the YTD high just about a month ago, it could prove an attractive buy point as Q4's strengths are coming to fruition. I hope you liked the video. Subscribe to my channel to stay updated on NIO, Xpeng, Tesla EV stocks. Have a nice day.